doing things.
Bang. Bang.
Welcome back. It's the Rollup TV.
Bang.
Interesting developments afoot.
What are we doing today, Rob? We're introducing a new segment. Rumor Mill?
Confetti for the new segment.
Rumor Mill's coming out today, launching, fresh launch. Let's go.
Yeah, let's get into what we're seeing out there.
Chat's popping. What's going on, chat?
𝘗𝘠𝘦. 𝘗𝘯𝘓𝘗.
𝘗𝘠𝘦.
Wow.
𝘗𝘠𝘦.
Why do you have a crown? GM. Something special is going on. I can feel it.
Wait, who said that? Who said why do you have a crown?
Someone in the chat has a crown. Watcher? That's not just a YouTube watcher. That's a watcher.
Really?
And he's got a crown, don't you?
Yes, sir.
Things are happening.
Wow, I have a crown. How come? I think it's because you've been coming to the chat and vibing, which is sick. Thanks, Watcher. We'll get you more and more of these crowns fired up. Guys, so stuff is happening, that's for sure. We got an amazing lineup today. We got some AI chads. We've got some tokenization chads. We've got Henry from Privy, just got bought out by Stripe. Yeah, guys, it should be a fun segment. We want to rip through some different tweets and things to show you guys before we get started. So I'm going to pull some of these up, and yeah, we'll get our first guest in here slowly but surely. 𝘗𝘠𝘦 is right. Monad has officially announced their airdrop claim date. So that's pretty stoked. People are excited about that. And I think reasonably so. So why don't we actually just start there? I'm going to pull that up and we can talk about what our expectations are for Monad, because I think people have a lot of high expectations for this airdrop, and I think that they're going to do it differently. So yeah, we'll get that up and we will see what people think about 𝘗𝘠𝘦. So yeah, Rob, what's your take? Do you think it's going to be a huge launch? So Monad airdrop claim portal to open Tuesday, October 14th. Rob, what do you think about this? I think that they're going to do it differently. I'll explain my thesis in a sec.
I agree. I do think that, look, this has been a long time coming. Monad has been building for years. It is an extremely hyped up launch, which is very, very exciting. They've been the subject of a lot of hate, pretty much because they've been building for so long. They haven't had a mainnet launch, and they haven't really shipped anything except for some memes in the community and some fun playing cards. And I think now all of that is about to change, and we're about to see if Monad lives up to the hype. So it's a really exciting launch. How this airdrop goes, I think, will be pretty interesting. They announced and launched those Monad cards. You and I both got one. We were also added to a pretty suspicious or auspicious list, the airdrop ? list, which was pretty interesting. And I think they are going to go about it a different way. I think from what I've heard, they're going to require certain tasks of the people that are eligible for the airdrop. I think it's no longer you just go to this website and you press a button and you claim your airdrop. I think they're only going to have the airdrop open for a small period of time, maybe a few weeks at most. And I think you're going to have to verify some sort of social credential, maybe the playing card, maybe a wallet, maybe a Twitter or some Discord. And once you legitimize your eligibility, I think they're going to make you do something with that. And that might be use the chain. It might be use an app. It might be deposit some critical amount of funds. I think they're going to make their users check multiple boxes so that they can start to claim real human users and not bots on their chain.
Yeah, I think so too. I mean, I think they've seen, I mean, that's the benefit. Like when we had Intern on, we were talking about what the benefit is of kind of coming to market later, and you get to see a lot of these experiments play out and kind of act and build differently as a result of them. And so this is going to be one of those things where they get to act differently and build differently. So we'll see what happens on the 14th. The Kalshi market right now is running at like 61% for before November for the launch. So we'll see what happens there. I thought this tweet was pretty funny. And I thought this week came back to a conversation that I had with 𝘗𝘳𝘗𝗦𝗧𝗏 and Mike Dudas, which was around, or actually it was 𝘗𝘳𝘗𝗦𝗧𝗏 and Mike from 𝘰𝘪𝘊. And 𝘗𝘗𝘗 was explaining how crypto is if Bitcoin, ascends to the $1 million mark in the next 10 years or so, we are going to have more crypto billionaires than any other industry. And like the general population of power and wealth is going to be, centered in the hands of crypto billionaires. So think Brad Garlinghouse, think CZ, think Justin Sun, think
Shane Copeland.
Think Shane
Tarek
Copeland.
From 𝘗𝘯𝘁.
All these different types of people. So
founders, builders.
I'm glad to be in this list here. One of 240,000. Not quite in the one of 450, but I do know a couple friends who are in the one of 450 club, and maybe Arthur Hayes is the only person we've talked to in the 36 club, if he's even up there.
I have a feeling we've talked to some more people in the 36 club. It's a little bit tough to pinpoint the 36 and separate them from the 450, but I think we've had several, probably double digits out of the if you combine the 450 and the 36, makes up almost 500, 486. I think we've talked to maybe 10 to maybe 1% of them.
Yeah. I just think that this is awesome because it's like, look, we're moving towards a world where, like I said, the crypto dominated billionaires and millionaires is just going to keep happening. So super bullish.
There's one more paradigm or element to this, which is the transfer of wealth from the boomers and that generation to millennials and zoomers and Gen X and that whole generation.
Yeah.
And this is like a major turning point.
Yeah, it's a shift. Yes, 100%.
Major shift as a result of just, the boomers getting older and shifting their wealth to the younger generation, and then where the younger generation chooses to invest their wealth. And so it's a compound effect of this industry and this sector growing bigger and absorbing more of the wealth, both in nominal terms and real terms.
I just think it's awesome that we're going to have a strong amount or like a significant portion of the world's millionaires will be because of this industry. So on another note, Max Marchion says it's easier for a 20-year-old kid to raise $2 million than to get a job. So yeah, I don't know how accurate that is, but I think this is a pretty indicative take as to where we are in the world in terms of, the cycle, in terms of the larger monetary cycle, and all of that. So the fact that it's this easy for people to raise capital is pretty wild. And yeah, So VoxX says, where is Nick when 𝘨𝘭𝑟𝑎 mainnet launch this month? Yeah, I think that's why we have Nick on today to talk about that and other. He's coming up in 5 minutes as Robbie lovely chops. Rob, what's your take on this? Is it easier to raise $2 million than to get a job? I think it's obviously a bit of a stretch, but what's your take? I'm like, why does this matter? Anyway, is it just like who cares?
I mean, it's just funny. I think this guy's just making a joke. But it's funny because it's true. It depends on the person. Like anyone can go work at McDonald's right now. But no 20-year-old, when they can make more by sports gambling, they can literally stand on the side of the road with a bucket, get a few bucks, and then gamble that on sports or crypto and make more money than they would working a job for 8 hours or 9 hours during the day.
I mean, that's debatable.
I think that's math.
People mostly lose at these types of things.
Well, eventually they lose, but you could go and you could find $50 on the side of the road and then put that into a gambling platform and get a $200 deposit bonus.
Yeah.
And that's it. And then you get money for free.
I think this is more of like
these apps.
I think this is more of like the AI market is so hot that if you have any sort of idea, you can get funding for it. And it's easier to do that than it is to go get like a high level job right now because the job market's so squeezed. And so there's just like this complete imbalance of the system where we're running low on founders. People aren't wanting to found companies anymore, but there's a ton of people looking for jobs. So
are there a ton of people looking for jobs though?
I think it's pretty hard to get a job right now. I know we're freaking pretty far removed from reality, but it's pretty hard to get a job right now.
I think young people though, for the most part, are able to find, there's not a lot of like movement in the job market from my understanding. Like people aren't getting laid off. For the most part, people had jobs and they are staying in their jobs. And you're right, people that are looking for jobs may not find them, but also people aren't getting fired.
Yeah.
So as a result of that, like unemployment is relatively low.
Yeah.
And that's just a number that we can track. But at the same time, it's really easy to go and raise. And I think that's a function of both the economy running hot as well as the fervor and the sentiment in the market being so ridiculous.
Yeah.
That I mean, VCs have had their assets appreciate so much that it is worthwhile to put some small check behind even just the most remote possibility of an idea catching some fire.
Yep. Especially when rates are low and like where else are you gonna put your money type of thing. It's just like, but basically like we're in the place where the AI investment is so high and so hungry to put their capital somewhere, but the job market is just really not easy right now. So it's just a really trippy phenomenon.
I don't know. Unemployment's low.
Is it? I wanted to pull this up. We had a couple. We had a bunch of stuff to go through. I woke up this morning and I saw this on my counter at my house, and I thought this was pretty sick. Wall Street Journal, top of the Wall Street Journal. NYSE owner bets on crypto firm. Obviously, it's Polymarket. Yesterday's big news. Pretty just wild headline for crypto as an industry. So fucking amazingly bullish.
Yeah. My mother called me yesterday. She was listening to NPR and they did a segment on prediction markets and mentioned 𝘗𝘯. So it's like,
yep. It's absolutely blowing up, man.
Yeah. Dude, we're about to find out if Shane is the next SBF or the next Satoshi.
It's funny, both the guys, 𝘬𝘓𝘃 and Shane, are both like very interesting and unique in their own ways.
Oh yeah.
One thing that I think is coming up is this debasement trade. It's already happening. Bitcoin is just not catching up to gold right now. But I think if you look at it like this, it's a really interesting way to look at it. So in USD, the NASDAQ is up 165%, SPX 102, home price up 56%. In gold terms, the NASDAQ's only up 7%. The SPX is down 18%, and home prices are down 37%. In Bitcoin terms, the NASDAQ is down 78%, SPX is down 84%, and home prices are down 87%. How do you even rectify this since COVID the last 5 years? It's the debasement trade.
I think home prices are going to go down even more.
Really? No way. If they keep lowering rates, it's going to reignite the real estate market.
They want people to be buying homes, and if they keep going up, like people aren't buying homes. The investment companies might buy the homes, and maybe that's what happens. But I think Trump's also making this part of his policy. They're trying to lower home prices so that the younger generation has the opportunity to buy homes. And we are at this critical inflection point now where we either make that a reality or we go into the reality of you own nothing and be
as a homeowner. I don't give a damn about your lack of ability to buy a property, Rob. Sorry about that. You should have bought it 5 years ago, bud. Good luck out there.
I bought Bitcoin instead, and I'm up 87%.
All right, guys. We're going to pull up our AI Supercycle episode number 4. We're going to get the guests up. I think they're ready in the back. Rob's going to buy a house. He's going to buy a farm. Just need Bitcoin to go a little higher. And we're going to protect our assets from the debasement of worthless, hopeless fiat currencies. That's what we're doing here on the show. So guys, be right back.
Last night.
Alrighty, guys, welcome back to AI Supercycle. This is episode 4, our premier open source private AI oriented show presented by 𝘗𝘳𝘃, the leader in AI in crypto. Perhaps Nick from 𝘗𝘀𝘃 is set to challenge that, but today we are going to say that 𝘗𝘳𝘃 is the leader in crypto times AI, pushing forward with their intents with Zcash recently, as well as just broad adoption for agentic transactions. And they have a very, very cool new private LLM feature set being launched, so I can tell ChatGPT about all my girl problems without Sam Altman knowing. Guys, we've got an amazing lineup. We got Danny from Archetype. We've got Nick from 𝘗𝘀𝘃, of course, Rob. Guys, welcome to the show.
Thanks for having us.
Really appreciate it, guys.
Yeah, awesome. Pleasure to have you guys on. Tons of speculation, all kinds of things that are happening in the space. Before we jump into it, Danny's first time on the show. Would love to get a quick intro and tell us a little bit about how you found yourself in crypto AI.
Absolutely. Yeah, it's great to be on the show, guys. My name is Danny Sarsock. I'm a partner here at Archetype. We're a New York-based early-stage crypto VC. We're in our third fund, just launched that. And we've long had a very big thesis in terms of crypto's ability to play a critical role in the trajectory of AI over the next years, decades, and beyond. Our view is crypto has a unique ability to impact AI across 3 frontiers, really, around access, around critical infrastructure, and around killer applications. We think we've largely solved that first bucket in a really, really important way, but our focus is now on how do we enable truly critical, mission-critical infrastructure to take AI to the next level, and as well as a new field of killer apps that make use of what blockchains are uniquely positioned to do around distribution, coordination, monetization, and more.
Awesome. Maybe we can start just by opening it up with the current meta, the current landscape, if you will. All of the adoption that we're seeing in terms of real growth in the market for teams that are live, teams that are liquid and launched. There are a lot of the boring stuff. It's what we would call the return to fundamentals, the payments, the remittances, this kind of financial engineering. And we haven't yet seen the real tangible results of crypto AI. So maybe you guys could just kind of help us understand where we are at the stage of development. Is it okay that we haven't seen a lot of real tangible things since the era of reply bot AI agents on Twitter? Generally, where do you guys see us on the innovation curve?
Yeah, Danny, you want to start?
Happy to. I think it's a great question. A critical framing that we use from our side is understanding the difference between speculative assets and solutions. And that goes to that first bucket of where crypto can have an impact on AI, around democratizing access and exposure to the upside of the field. And so our belief is that even though you might look at sort of the capital deployment and the broad market maps of all these different participants that make up what we think of as crypto AI today, the truth is most of that has been launched to solve that first need around giving people the ability to speculate and get exposure to AI. They're not actually fulfilling needs at every layer of that different stack, whether it's compute, data, models, applications, et cetera. And that's very important. The reality is conventional markets fall very short in giving people the ability to get that exposure. So that's a real need. I don't want to underplay that. But in terms of your question around where the real impact comes into play, part of that is just, look, this is hard stuff. AI in the traditional lens is moving at light speed. We're basically playing catch up in real time to something that is moving so quickly. But the other part is it's taken time to build trust and attract S-tier talent from the AI community. I mean, we have amazing talent in crypto, but we need to bring in some of that frontier talent that comes out of AI. And it's taken time to explain to them the value proposition of crypto rails and blockchains, to give them time to really internalize us as a credible frontier for the development of the future of AI. We're seeing a turning point right now in terms of some of the most interesting development happening at a distributed sense, both in terms of model development, around data collection, to your point, around early form factors of killer apps. I mean, the agentic field of Q4-ish of last year was not terribly interesting, but at least it was different. And so all of that is maturing in a way where, yes, we've solved bucket number 1, give people access to the upside of AI in a liquid form. Now we're moving into, let's make a real impact at the infrastructure and tooling layer, and let's drive forward net new applications that are intelligent and on-chain.
Yeah, I agree a lot with what Danny said as well. I mean, like, I think like a core piece of this is that this infrastructure is just difficult to build. I think like we're essentially having to rebuild the entire AI stack in a kind of decentralized form factor, and that's just a non-trivial issue. I think we obviously saw some sort of early networks come to market in some of the, I guess, like more straightforward problem spaces within the AI stack. I think like GPU marketplaces have been around for a long time now and stuff like that. I think we've seen some really interesting progress in the other layers of the stack, like around like data labeling, data provisioning. Obviously, Grass has grown to be really big, other protocols like that. I think we're still seeing some of the infrastructure be built out and be brought to market around like the execution layer of the AI stack, which is like the kind of suite of protocols or networks that enable models to basically run in decentralized environments. I think we'll start to see a lot of those start to come online, gain adoption in Q4, Q1, beyond. Yeah, the infrastructure just hasn't been laid yet. I think agents are probably the most like immediately viable kind of sector within AI. I don't think that's what agents were Q4, Q1 of last year and early this year. I think like we've approached agent development as an industry in a kind of misdirected way. I think we focused on one half of the agent puzzle, which is capital formation. Obviously, tokens are really effective at forming capital. If you create an agent that essentially acts as sort of an autonomous KOL or an autonomous attention seeker with a token attached to it, it doesn't matter what it's doing, it's going to form capital. But once it has that capital, these agents don't do anything interesting with them. And so I think there's a new wave of projects, companies in the space that are building agents in a more productive way that can actually both form capital and then do something productive with it. That's why I think like DeFi is going to be this kind of like de facto environment in which this kind of next gen of agents is going to operate. We've seen some early stuff around this, but I think that becomes the kind of main application space or user space within the crypto AI space. So these things are just coming. I think these kind of cycles to build these things out of launching these things is just longer than sometimes people in the crypto space are happy with. We've gotten used to a bunch of infrastructure existing, it being trivial to just fork a bunch of stuff, making small nuances, and then resulting in this like super fast feedback loop. I think AI and crypto is just a fundamentally new category that needs that initial build out period, basically.
So Nick, on that frame of thought, right? We've seen the broader kind of on-chain landscape and just general like blockchain infrastructure. We've gone from like, you could call it like chain centric, where users are using a chain. Then you could say that we went through like this intent centric framework, where it was like you intend to do a cross chain transaction, and then you have these solvers filling these transactions. You can even now say that we're moving to like app centric, where if I just want to use Polymarket, I don't even care what chain or what intent. I'm bypassing all of that. I'm just going to Polymarket. I'm just going to Uniswap or whatever it is. You've kind of thought deeply about this objective centric AI model and like frame of thought with regards to how we should approach blockchain development when it comes to AI. Is that like a evolution of a previous thought process in a similar kind of model that the broader crypto landscape went through? Or maybe you could just kind of walk us through like what the different like centric models that we've had so far in AI development in crypto, why you think objective centric is the current, and maybe even what's next.
Yeah, for sure. I think it's a great question. I guess just to start, to define objective centric, I think it's useful to sort of like examine the paradigm of how we interact with AI generally today, not just within the crypto space. And then we can get into sort of like what the crypto space uniquely enables in AI paradigms. I think if any of us here want to interact with AI, if any developer or company wants to integrate AI into something they're building, they have to do so in a very model-centric paradigm. They have to kind of survey the entire universe of AI models that exist, assess which is the best model for their given use case, and then lock into that model. And models are always changing, use cases and circumstances around use cases are changing. And so this like pretty heavy lift of doing this analysis and then model lock-in is like a meaningful source of inefficiency in how we interact with AI. And it also results in the kind of market structure we have in AI today, where there's this kind of like hyper consolidation around single-digit number of enterprises that have built the models that the majority of AI consumers use. And when you exist in a market that has such consolidation, you are essentially excluding massive amounts of resources, kind of hard resources such as data, compute, things like that, softer resources, for lack of a better term, like talent, other models, et cetera. And so it creates this really inefficient market structure. And so the idea of objective-centric AI is, instead of the consumer or the user of AI doing this work of looking for the best model, locking in, doing this continuously and ad nauseum, is you create environments leveraging decentralized networks, not too dissimilar to what we've done with Intents and other systems in kind of the blockchain or crypto space, and then enable users to just specify what they want AI to do and what they define AI doing that thing well is, and then allow these kind of efficient market environments to produce the best output as a function of that kind of objective. And so you remove all of the onus or all of the overhead from users in needing to know anything about the models they're interacting with. Just allow them to specify what they want, and then let this efficient market of models produce that. And this is like very analogous to transactions and intents, like you were saying. Like before Intents, the only way any of us could interact with blockchains was by determining what we wanted to do and then walking back a specific set of functions or state transitions we wanted to make on chain to achieve that effect. This is a ton of overhead. It's suboptimal often. We're not the best at pathfinding. And so it results in this, again, consolidation of DeFi protocols, consolidation of kind of environments in which we interact with. When Intents came along, it essentially offloads all of that pathfinding, all of that discovery, to a specialized set of market participants and solvers, such that users could just specify what they want to happen. This specialized market of solvers could then figure out the best path for it. It results in way less overhead for the users. It results in way more optimal path finding for each transaction as it's going through, as a function of it being coordinated by these competitive markets. And that's really the key of what decentralized networks or crypto enables. I think they are, like, crypto and decentralized networks are more than anything tools for instantiating tightly scoped, hyper optimized market environments for provisioning different types of resources, whether that's transaction paths, whether that's model outputs, whether that's energy in the case of Bitcoin, compute, trust, whatever it is. And so that's the real meaningful unlock in crypto AI, I think, and where we're going to see a lot of the most tangible benefit in starting to refactor AI in a kind of decentralized form factor.
Anything to add there, Danny?
I think Nick said it incredibly well. And it sort of alludes to one thing that we also really believe strongly here at Archetype, which is there's too much emphasis in almost this lazy take around blockchains purely offering decentralization to AI. And our view is blockchains offer so much more in terms of composability and coordination, the ability to scale critical resource markets that AI needs to go to the next level, in terms of giving agents the tooling, the almost like exoskeleton that they need to be functional. And so there's this incredible amount of dynamism that blockchains bring to the table. And to Nick's point, the important thing is to give people the freedom to sort of think through and express a whole range of scenarios and use cases that they want, and then use blockchains to actually enable and scale those.
Which kind of brings us to this paper that you've drafted and put out around the benchmarks. So I think we've established here the frame of thought for how we should be thinking about basically the intersection of these two industries on chain, and kind of analogized it to this intent kind of world. And Nick, in Alora's design, there are actually quite literally solvers and intents used in this model. But if we're gonna analyze Alora, or we're gonna analyze some of these networks, I don't think that we can look at something like Plasma and be like, oh, look at the stablecoin TVL and the amount of yield on DeFi, and like think about how that ties into the token valuation of a given token, or what that network should be worth. Danny, you seem to think that we should have new benchmarks for AI when it comes to this intersection. Maybe you could just give us the 30,000-foot view on what this looks like, and then we can drill into it.
I think you're absolutely spot on. And we sort of frame it as like there's benchmarks and there's evals. The benchmarks, broadly speaking, are what I was alluding to earlier, which is, give people democratized access to the exposure of AI's upside, build critical infrastructure that drives forward the future of foundational work in AI, and unlock net new killer apps. But across every single part of the stack, the evals, what you're alluding to, differ tremendously. And what we've historically done a pretty poor job of is really thinking through what those evals are from the perspective of the stakeholders at any part of that stack, and building around them. We typically end up operating in these siloed echo chambers where we build things that nobody really cares for in the real world. And so at any different part of that stack, it'll be different. So for compute, for example, it'll be everything from, latency and uptime of GPUs, the cost per token and the ability to generate them fast. It'll be around how can you scale up for, latency insensitive, long duration inference workflows. So it's all of these different things that matter at every different part of the stack. Likewise at data, it isn't as simple as just let's throw tokens to get people to supply their private data. You have to think through the market structures around what data looks like. How do you build post-processing and really make the data from raw to useful? Who you're selling into? How do you think about economics post-selling into and sort of creating a durable, ongoing return of value to the providers of that data? And so the point that we were making in the article is simply that at every part of that stack, there's a set of evals that are very specific and guide whether we're building useful things that will actually create and capture value. And it's very, very important that we as an ecosystem of participants are very clear about what those are and are building towards them versus sort of like the high level blind approaches that I think we've historically taken in many other parts of the stack.
Yeah, it's usually the hot, shiny thing, gets all the attention, gets all the technical people to kind of flock around it, and we don't really zoom out and think, okay, well, is this thing really going to be useful? And so when you're applying, like, Danny, maybe we could go through just a fun exercise here. Like if you're applying those evals to 𝘠𝘪a, right? And you're looking at 𝘠𝘪a and you're looking, okay, how do we know this thing is really useful? How do you look at it? What are you looking for? What are the questions that you're asking of 𝘠𝘪a, the network? And then we can kind of, come to an understanding and then use these general rules to apply to other projects as well.
I think it's a great question. And there's a few, right? And so first off, maybe to the point Nick was making around the ability to give people the freedom to express a range of things they want to execute on chain and actually solving for it. It's not too dissimilar to thinking about how bridges work today, right? The things that are going to matter to those people are the ability to, first off, express all these different things that they're creatively coming up with, and then actually solve and execute on in a way that is reliable, that is cost efficient, that unlocks net new outcomes that they historically couldn't, whether that's opportunities to trade and be participants in a very sophisticated ecosystem that was previously off limits to them, whether it's around the alpha that they're generating and sort of their actual returns, whether it's around the time that it frees up to them. And so it's around understanding what these people are actually looking for, and then being able to create the evals around that to say, yes, in fact, we are building systems that are delivering on that value proposition. And likewise around the ideas of, broader swarms of intelligence, right? One of the big value props that we have in crypto around, can we sort of scale horizontally to drive more intelligent overall systems? Again, the approach there should be very simple, right? It should be around, first off, looking at the net incremental contribution from any one of those participants, and then looking at overall, is the system getting smarter as a result of that horizontal expansion? And you can use similar evals that you would in a traditional industry where, okay, maybe it's around a specific use case of the overall swarm intelligence that we're using in a specific enterprise context or a retail context or as a gaming or an entertainment piece. But in any one of those scenarios, it's just about understanding what people are looking for. And I think Nick and 𝘠𝘪a have been somewhat uniquely positioned over the last couple of years to think very granularly about what actually matters here, and then how do we meet those needs versus sort of like high level pie in the sky ideas.
Nick, and so, one of the things that I think that we've been pushing on in this show that is probably one of the evals that we would think about is, we have the general kind of privacy and user ownership when using LLMs and, the organic nature of data sets, prior to using an LLM, these types of things. But one of the bigger concepts is also about verifiability. And so I think one of the evals that Danny, Robbie, and myself would be looking for is, how do we guarantee this level of trust when these AI outputs are probabilistic by nature? How do you verify and create a verification system for trust based on either economics, reputation, cryptographic proofs? Like, what is the stack that you think is the best format to guarantee trust for AI outputs, knowing that they're probabilistic? How does 𝘠𝘪a approach this? How do you kind of see this problem being solved?
Yeah, I think it's really use case dependent. I think some use cases require different levels of sort of verifiability than others. Like some things will require like ZK verifiability of an output's fidelity, and some will require sort of lower fidelity means of verifiability. How we've sort of approached the problem is in creating a kind of environment that produces, I guess, like economic verifiability, in that we haven't like concerned ourselves as much with this problem of sort of like decentralized execution of models, which I think it goes hand in hand with like more of these kind of hard forms of verifiability, cryptographic, et cetera, of these models. That sort of lives outside of the scope of the network. What we've done instead is we've created an environment where the kind of mechanism design of the network ensures that the sort of best responses are being emitted to the ultimate consumers of these outputs as possible. People are rewarded if they're producing good responses as a function of the rest of the sort of network participants and their relative reputation, and they're punished otherwise. And so I think in that you create you sort of subvert the need for some of this hard verifiability when consuming AI. AI is a non-deterministic form of compute. It's very difficult to verify. There's a lot of like great projects working on that. I think for us, it's been more about how do we create an environment where like one's returns are based solely on how effectively they're able to produce good responses and I guess like trustworthy responses in this kind of environment. So people are emitting inferences on 𝘠𝘪a, those things are being all aggregated together, and then the rewards for those individual kind of model contributors is being distributed based on how useful each of their model outputs was. We don't even care where people are running models on the network. People are running closed source models on the network. You know, the best forms of AI today are still closed source. And so trying to tackle this problem of sort of hard verifiability and also encompassing these kind of closed source models is still, I think, like a fairly difficult challenge.
And I think to Nick's point, actually, evals in many, many scenarios are a good way that you can sort of solve for the same thing that verifiability would. In other words, like as long as you're delivering on what users expect, you know, let's say it's an agentic trading protocol, right? As long as it is unlocking the performance and the other use cases that people expect of it, it doesn't matter if you're actually running the model that people expect you're running on the back end on the exact piece of hardware that you're claiming, or in fact, you've locked a quant in a basement who's doing raw calculations by hand and inputting the trades on your behalf. As long as it's working, people aren't going to care. Where they start to care is, are you starting to deviate from the value proposition that they promised them? And then the questions come into play, like, are you cheating by using lower grade hardware or a less performant model and things like that? Now, of course, that's totally separate from much higher stakes use cases around, you know, let's say medicine or private data and things like that, where verifiability does become a lot more relevant. But I do think for a lot of more general purpose use cases, you don't necessarily need hard verifiability. You can approximate it using the right evals over time.
How do you guys anticipate that we're going to blend some of the principles that are alive and well in crypto and without becoming maximalist and decentralization and that kind of ideology? There's plenty of Web 2 style AI centric principles that we can also apply to as we're kind of building out this sector that's blended of the two. And you know, we kind of get caught up in our ideology in the crypto world, but there's, and you know, to Nick's point, a lot of these good models are closed source still. They've built this without UX detriments. ChatGPT is super easy to use, these kinds of things. What are some of the principles in Web 2 AI centric SF development? What are some of the principles and the ideas that are shining through now, as I think we're realizing in crypto world, look, we don't have to be decentralization maxis. Hyperliquid is you know, capturing a lot of market share. People are kind of coming to this realization that it's this practical era. We're building for the real user, and we're kind of leaving aside some of those, you know, the core ideologies. They're still making it, but like we're not maximalists about it. How do we blend these two, and what are some of those principles that we can draw out?
Yeah, I think, and Danny, I'm curious to hear your answer too, but I think we've done like a pretty bad job of this to date. For one, to what Danny said earlier, I agree. I think it's been very tricky to get some of the AI industry into the crypto AI industry. I think like crypto has a somewhat troubled past, obviously, and so that sort of marred people's perception of the space, and that's contributed to it. But I think in some ways, like ideology is sort of held on this pedestal as I think this like, I don't know, kind of nebulous, sometimes useless thing. I think we operate in like a market economy. We make decisions based on like a very core set of like functions. So our calculus is very simple about when we make decisions. Am I going to get more value out of using this thing versus that thing? Does this environment uniquely enable me to tap into new types of experiences, markets, et cetera, than this other thing? I think that's where crypto has shined. It's not been in this kind of like religious devotion to a set of ideologies. It's been in unlocking kind of net new venues and net new verticals for people to play with. I think that was the success of like the early AMMs like Uniswap. It opened the floodgates for sort of long tail asset classes that traditional finance couldn't accommodate. We've seen this with the meme coin cycle over the past couple of years. Obviously, prediction markets have sort of tapped into this more efficient and autonomous coordination of market participants and brought over users, not because of an ideology necessarily, but because of a fundamentally kind of like new feature that's born from decentralization. And so I don't know if I have a great answer of what principles we should borrow from like the I guess like centralized AI space, because I think what determines winners and losers in this space, in any space, is much more based on sort of fundamentals and like what you unlock for your consumer base, more than it is based on sort of any specific ideology that's attempted to be followed, because often ideologies get left behind in the face of those fundamentals anyway.
Yeah. Danny, then maybe a more like direct way, is there areas where you think decentralization is going to actually change AI outcomes versus just like slow things down for the sake of decentralization? Like, is there a kind of a black and white here that you've carved out?
It's a really good question. Like, and to your point around like what we can learn from Web 2 as part of this other question, right? Like, we most align in theory with like the open source AI community that exists in SF and around the world. The ethos, the mission, I think is very similar. The problem is we haven't approached getting there in the same way, right? In the open source Web 2 AI community, it's still about the efficiency of the systems and how you're going about things, making sure that things work, they are functionally advancing that mission. Whereas in crypto, I think too often we've over-indexed on decentralization at the expense of functional systems, tools, and products. And so for us, the reorientation has to be, okay, we can move towards open source, decentralized form factors, but the mechanisms that get us there have to be very practical. They have to be informed by economic considerations, by technical considerations, et cetera. And it also alludes to another point that we've made repeatedly, which is there's a big difference between decentralized and distributed. And very often in this space, we use the two interchangeably when we shouldn't be. A lot of the value prop that crypto brings to the table in how it can impact AI comes from more distributed form factors than true decentralization in like the old school protocol concept. And so for example, like if we're talking about like data collection at the edge, right? You're more than likely going to have an operator, a centralized operator who's opinionated about the types of data that they need to collect, the ways that you create an application to incentivize different scenarios and reward them, the post-processing, thinking about enterprise sales and how you create economic value around that. But the actual supply side of contribution is very distributed. Likewise, if you think about like a reinforcement learning like network in crypto, right? Like the value prop there can absolutely come from horizontal distributed setup where you have environmental and verifier diversity that leads to better evolution of more robust, interesting agentic models. But at the same time, you absolutely need a centralized team that is focused on the curation of those environments and thinking about tweaking things on the algorithmic side, what they're actually going to use these models to, how you bring it all together in a way that's coherent. And so the TLDR is distributed value proposition from crypto makes a ton of sense. The decentralized value proposition of crypto can make sense in certain areas, for example, in economic ownership and governance and things like that. But forcing it at those other parts of the stack is what sets us behind, where the open source AI community in Web 2 is like, oh, crypto, you could actually make an impact here. They take a look and they were like, none of this works. We're going to go back to doing what we do today. In order to bridge that gap, we have to actually think towards building things that are functionally guiding us in the direction of the mission that we do share with the open source Web 2 AI community.
So could you guys give us a bit of an education here on the way that these models are currently curated and bringing together some of these distributed elements of the stack and different parts of inference? There's kind of a before and after picture here. The before is the way that these larger models are orchestrating these models right now, and the after is basically turning all of those distributed mechanisms into one coordinated market, and having all these submarkets. And Nick, maybe you can speak to the markets piece. That is sort of this new paradigm that we think blockchain can uniquely enable, these elements of these models that are coordinated and orchestrated via these markets. So could you guys kind of paint the picture, the before and after here?
Sure. Danny, you want to start off or you want me?
You start. I mean, you've been building this for years.
Sure. Yeah. I mean, like when we think about like the state of, or like the market structure of AI today, I think it looks like a lot of traditional markets, right? Like there is a lot of overhead that goes into sort of bringing models to market, to sort of establishing some meaningful level of market share in the AI market. And we can talk about just the model sector as well. But like, if I am a company or an entrepreneur trying to bring a model to market today, there's a lot of kind of like expensive, non-trivial steps to get from model development or model conception to value capture. I have to stand up a business. I have to acquire funding. I have to set up a bunch of administrative stuff. I have to productize my model often. I have to find distribution, PMF. There's tons of overhead. It's this long indirect path from sort of the initial seed being planted that I want to come to market with a model, or I've had some useful innovation in modeling, to capturing value from it. What decentralized networks enable us to do is shrink that path to the most direct and sort of shortest path possible. It allows us to go from model development or model conception to value capture just by pointing that model at a given network. That's kind of in the scope of what we're building. This could be many different types of resources, obviously, but like decentralized networks turn any industry into that kind of before and after. Bitcoin did this with energy, right? If I had access, or if we invest had access to energy prior to Bitcoin, it was still like a fairly long and direct path to turning that energy into value. Sell it to a grid, stand up an energy company, et cetera, et cetera. Bitcoin, it creates the shortest path possible of turning excess energy into value just by pointing it at the network. And so we can start to break free of this like material inefficiency that exists in the trad AI industry, these long indirect paths from sort of creation to value capture, by wrapping the market environment in this kind of autonomous and coordinated decentralized network. And that's really the most like impactful aspect of bringing decentralized networks to any industry. And that applies very directly to like the before and after of bringing decentralized networks to AI as well, in my opinion.
Danny, do you see this as a common principle or building technique, bringing this sort of market structure to the AI landscape as a whole? Do you anticipate more projects to follow suit?
Absolutely. I mean, to Nick's point, the whole mission really that all these projects have is like the ability to take from the ground up, a frontier model to market in Web 2 is restricted to a very, very small set of teams that can aggregate the capital, the technical resources, the talent, et cetera, needed to actually do that. What crypto seeks to do, and what it, I think, has the biggest potential to do, is use the ability to aggregate capital and aggregate people and resources and input and data around the world in a way that creates an alternate stack, a supply chain that helps people do that. And it does so in a composable way. I think most of that has been promise more so than actually delivered solutions. But I think we're starting to get a lot closer in having bits of that stack come together in ways that actually, materially make an impact. So like even around just like compute itself, right? Like the compute substrate we have in crypto for anything beyond just sort of like spot or on-demand inference has never been reliable enough to be a real part of the conversation. But there's a lot of projects that have actually made material strides in the last couple of years in terms of building these frameworks where not just inference, but increasingly, reinforcement learning and ultimately like pre-training can be done in a distributed context. And so ultimately, the goal is to replicate the end-to-end supply chain stack that is very closed off and controlled in Web 2 AI. But it's really, really hard because we have to do it at every layer of that stack, and every one of those independently is extremely difficult. Doing it in a very coherent end-to-end supply chain way is even harder.
So then, how do you think just one quick follow-up, Danny? How do you think the capital formation evolves? Do you think it's M&A and bigger AI companies coming in and buying some of these like more modular players, or do they team up, or how do you think this evolves to become significantly impactful?
It's a great question. I think in Web 2, we absolutely will see a lot more consolidation. I mean, at every layer of that stack over the last couple of years, we've just had an explosion in the number of participants and attempts to build companies of them. Most of them are just struggling to reach scale and break out. And so it just makes sense that you'll see consolidation. In crypto, I think where we have the advantage is blockchains give you the ability to hit sort of like sustainable economic scale with a much smaller base of participants. And so I think what's interesting about crypto is not just markets that give you the tools and the resources from a sort of a technical side, but also like the capital to be a sufficient and a sustainable player at a much smaller scale. In Web 2, doesn't work. In crypto, there's a feasible path where a very open and diverse ecosystem of much smaller players around this stack can sustain itself over time because of what blockchains enable at an economic level.
Yeah. So it sounds like the answer to the question of which AI primitive or which of the AI primitives will actually create value on chain. It sounds like, you know, we've talked about agents, we talked a little bit about compute, but it really sounds like this coordination kind of problem of models, of data, of incentives. You guys, you know, seem to agree that that coordination like network, if you will, is really the core driver of of value on chain for AI.
I think so.
When I think of it from the infrastructure side of things, I think coordination is a really big part of it. But there's also the advantage that crypto has on sort of the application frontier, which is, you know, we're the only place that has spent the last half decade thinking through what is like digitally native rails for the creation, the distribution, the monetization, the composability of content and assets and IP look like. And so when we think about what is AI ultimately going to get used for, I think crypto also has a huge advantage on that front. Everything from the absolute end layer for apps, but also even for the agentic stuff around payment mechanisms, around reputation based on cryptographic primitives for these things, and new capital and credit markets around AI in the wild. And so, yes, I think coordination is probably really valuable on the infrastructure side, but I think everything else that crypto spent years refining and developing and stress testing, that's where we have a huge advantage in terms of actually productizing AI and coming up with net new apps and use cases.
Yeah, I think that's a great point. I think the value capture of AI, the real promise of bringing AI to crypto, in my opinion, is in like moving towards this like utopian state of society where like we achieve hyper financialization, where every possible thing in society can be turned into a financial market. We've laid a lot of the foundation in that in crypto and DeFi itself, and now we have these like more efficient, autonomous, and hyper composable financial building blocks that can be combined to create ever more and more expressive building blocks. But the people using those, the market participants, are still like quite inefficient, and so there is a fairly low ceiling still on the level of financialization that society can realize. And AI is the most deflationary technology to ever exist. Agents can participate in market sectors, process data sets, and make perspectives and decisions in domains that are incredibly long tail, incredibly niche or esoteric. And so I think a lot of the value is going to be captured in the like rapid expansion of the kind of applicability of markets in everyday society. I think AI agents are going to be the de facto user of prediction markets. They're actually going to make prediction markets like hyper useful across everything in society. They're going to start introducing markets more into like our governance processes, and from local to federal, whatever it is. You know, I think like a lot of the value capture comes from just like unlocking this incredibly proficient net new market participant, and what that means for embedding markets into more and more of our daily lives, basically.
Yeah. Yeah, I think that trend is accelerating, and as you've mentioned, AI kind of pours fuel on the fire in a way, and kind of enables a lot of that. And I think one of the examples, right, is the use case for crypto, the agentic transactions, and all of the work that's came out the last couple of weeks just on X402 and Coinbase promoting it. And we had Jeremy Allaire on the show a couple of weeks ago talking about it. It's been a large growth here that I think people are really starting to pay attention to. Guys, we're coming up on time, but Nick, I'd be remiss to not fulfill the main community question here, which is, what is the state of development in 𝘮𝘮? I know, mainnet's looking ready for Q4 here. What's the timeline? What are you guys building? What can we expect? Close out.
Yeah, I unfortunately can't share a specific date, but everything is ready. And so it should be quite soon, is what I can say, basically. But yeah, I mean, everything's ready. The network's good to go. We're in the kind of like we're working on some sort of final migration steps, and yeah, really excited with how things have been coming along. And we have a bunch of exciting stuff planned for the coming weeks and beyond, basically.
Can you spill any like day one launch partners, anything that our community can expect?
I don't know if I can do that. I will say we have some, and we'll release some more stuff on this soon. But I will say we have some really exciting agent related stuff coming out around that. So
beautiful.
Yeah, we spent a lot of time building out a bunch of stuff to start enabling millions and millions of DeFi agents to start spawning and tapping into this kind of. So it's gonna be
millions and millions of DeFi
coming to a blockchain near you. I hope you have high TPS.
Yeah.
Nick, Danny, guys, thanks for your time. Thanks for the insights. It's been very educational and just an overall pleasure, guys. Look forward to the mainnet, Nick. I know you're busy, so thanks for sharing some time with us, and great to meet you, Danny.
Thank you, guys. Really appreciate it.
It was a pleasure. Thanks, guys.
Alrighty, guys.
See ya.
Bang, Rob. 𝘨𝘯𝘕 mainnet imminent. The AI times crypto future is as powerful as it's been. It's coming. It's here. Near is powering it with their near intents. I'm sure that they can work with 𝘨𝘯𝘕. They've got their private chat coming out here. Shout out to Near. Shout out to 𝘨𝘯𝘕 and Archetype. Yeah. Rob, what's your key takeaways?
Millions of agents. And agents as the primary driver and users of prediction markets. Pretty interesting to hear that take. And I think he's right on like a pretty long-term time horizon. I think in the near term, we're going to continue to see prediction markets as mainly a speculative vehicle, but we're going to have millions of agents. They're going to be making DeFi markets and making perps markets, and LPs will be primary market makers for a lot of these.
And prediction markets.
And they'll be, it's actually a really technical and really deep point, because AI is just a prediction engine. And so the best AI, you could say, is almost a prediction market itself. And these prediction markets sort of have these network properties where they supersede one another. Like the oracle of one is also a prediction market for another, and they sort of feed, and that kind of builds on the self-fulfilling prophecy of a lot of these prediction markets.
It does. And all of them trend. Anyone that is relevant to a human trends towards assassination. Hopefully we do not have agentic beings accelerating the assassination of any human-led prediction markets. Guys, we're going to take a break. We're going to come right back with our first rumor mill. I'm going to let Rob simmer on that one because that's trippy. Guys, we'll be right back. Introducing Rumor Mill, episode series number 1. Hyper EVM token launch season is imminent. Rumor Mill is our new segment where we collect insights, intel, and rumors from our DMs. I think this one came from my DMs, but Rob's DMs in the roll-ups and telegrams. And we share these insights with you guys live every week, bringing you alpha, bringing you new ideas and insights. Today's is Hyper EVM token launch season is imminent. I got a DM 2 days ago from a fellow Hyper EVM project suggesting that there are new tokens launching on Hyper EVM in the next 6 to 8 weeks. 𝘐𝘁liquid, HyperSwap, Project X, Hydra Finance, Kinetic, and even Unit with over $1 billion in TVL on Hyperliquid. Hyper EVM. I think Hyperliquid has been compared against Aster as a perp dex, but what is about to happen, I believe, is the L1 trade for Hyperliquid is going to ensue. Rob, I think we have at least 5 new token launches and airdrops coming for Hyper EVM. What's your take?
I like Hyperliquid. How do I get one of these airdrops?
Well, I think you got to be active on Hyper EVM. So you got to bridge via Unit from Hypercore, and you got to be active in these projects. So Kinetic is a liquid staking project. They've got a ton of TVL and a ton of users. That's going to be a massive airdrop and a massive token launch. Unit is going to be a top 100 token, I think, more or less. So that one's going to be if you've bridged any asset into Hyperliquid, like Plasma XPL or any of the Solana, like Fartcoin, and then the majority of the other ones, except for Project X, are like DEXs that are like AMM designs, I believe. So I would think you just got to be active on the chain.
Okay. Okay.
But no one's talking about this. Like, people are so caught up with Aster and Hypercore that they're not looking at Hyper EVM right now.
Well, they're caught up on Aster. They're caught up on Lighter and
yep.
the perp stacks, you know, sector and category as a whole. And so Hyperliquid has sort of been flying under the radar a little bit. People have been speculating, are they going to lose some of their market share to some of these zero fee perp dexes? And so what you're describing is that these token launches are going to go live, and there's going to be airdrops on the Hype L1.
On the Hyper EVM chain. That's going to create an on-chain frenzy on Hyper EVM. Exactly. And I think they're coming in as little as a week to 8 weeks. I think these all launch by the end of the year. Maybe we miss one or two, but the rumor source was pretty certain that these were coming imminently. Starting.
Is this a trustworthy source?
I think so. It's a pretty trustworthy source. I mean, sources, I made it up, but like, you know, I think it's a pretty trustworthy source. So guys, I don't have any immediate action for you to take as a result of this, but I think that this is happening. If you're paying attention on Hyper EVM, there's a lot of underfarmed opportunities. And I think the Hyperliquid chain itself, separate from the core, is going to get kind of an on-chain stimulus. And I think Unit is the biggest one that is coming. And I think that is going to be the massive breakthrough for the Hyper EVM chain.
We had a great show with I believe it was Luke.
Yes.
Who came out of the Hyperliquid ecosystem. He really gave an insight into what season 2 of Hyperliquid could look like. He gave us insight into what the functionality between builder codes, HIP3, Hyper EVM, Hypercore, how all these pieces fit together, and how to position for the next season of Hyperliquid.
Yep.
A lot of these projects, I don't know if they were mentioned specifically, but they were part of the ecosystem that we were describing some strategies and how we could position for either one of these one of these projects airdrops that we have on the screen here, or for a later season Hype airdrop. Yeah. Which we also still believe
I think that should come, that could come too.
Also before the end of the year?
We'll see. All right, guys, that's our rumor mill. Stay tuned for later in the week for the next one, or early next, guys. And yeah, I think that there's a strong reality that these things launch in the next couple of weeks. So if you're farming there, stay active. If you're not, it could be worth a shot. I think it's coming, and we'll see you guys on the other side. I think we got our next guest, Henry from Privy, coming on the show. So we'll take a quick break and be back. Thanks, guys, for being part of Rumor Mill. Hope you enjoyed. Alrighty. Up next, we've got Henry, co-founder of Privy.
I'm pretty stoked for this one. Privy obviously got acquired by Stripe.
That they did.
I think that's pretty cool. I think that's pretty exciting. And I generally think that a lot of the payment infrastructure that's coming on, like I'm, maybe this is a hot take, I'm actually bullish stable chains.
Oh, that is not a hot take. I think everyone is bullish stable chains.
I just think, look, we talk a lot about Bitcoin dominance. I think Ethereum dominance is actually a little bit too high. I think a lot of the TVL, like look at the stable coins. I mean, right now, if you look at DeFi Llama or, you know, really any analytics site, they'll tell you that the stablecoin balance on ETH is obviously the highest.
Yep.
I think it's 140 billion or something like that.
Plasma's coming in number 6 these days.
Yeah. And so then you've got Tron, which is second best at about 50% of the stablecoin balance of ETH.
Yep.
Followed by, let's see, I believe is going to be up there.
Yep.
But when you think about like how this thing is going to shake out, I mean, Circle launching ARC. Circle's got a circulating balance of
like 80 billion
USDC. Yeah, 75 billion.
Yeah.
And so if you look at the large chunk of stablecoins that live on Ethereum, and then you think, okay, what is the split going to be? And there's 75 billion USDC from Circle. How much of that is going to move over to ARC? How much of USDT is going to move into some of their stable chains? How much, you know, is Stripe going to launch their own stable coin and mostly house it on?
I think so. Just don't ask Henry. He won't be able to tell you.
I know. Well, we're going to bring Henry up in just a moment, but I think these are some of the exercises that we're walking through. And I think, you know, the where the stable coins are domiciled right now is really set to proliferate into some of the edges. I
do agree that it's been in one or two places, and it's going to spread out.
There's this entropy of stable coins that is about to happen, and we're going to see it accelerate now that these new venues are alive.
Flo says, so hyper EVM it is. Yes, it is. What you guys saying about Monad? I'm saying we'll check in next week, see what's going on. I think that should be interesting. ZT says, love rumor mill. That was fun. We got work to do on it, but I enjoyed it. And I think we got better rumors coming. I already have a couple more in my DMs, as well as on the roll up. So guys, we got Henry in the back. We're going to get him up without any further ado and talk all things Privy, stablecoins, UX, Tempo, Stripe, etc. Henry, welcome to the show.
Hi, thanks for having me.
Sick background, man.
Yeah, that is some really cool art that you got back there.
Thank you. This is actually not a virtual background, but this is my house.
Beautiful.
How did you put together this collection? What's the through line here?
Painstaking. These are all cover albums for some like obscure French comic.
Cool.
Ooh,
nice.
Very cool.
Well, Henry, it's your first time on the show, man. Welcome to the show. Would love just a brief background on yourself, and then one specific question for the audience is, what was your first reaction when you closed the deal with Stripe?
Immense relief. I think, you know, the reality of like M&A is it is a painstaking, long process. It is like getting a very, very deep physical background check and everything all at once, but at a company-wide level over a period. And so I think Stripe just was absolutely amazing, and the corp dev team is really world class and did an amazing job, and everything went very, very quickly. We closed the process very fast, but it, you know, certainly felt like a side job. Like I had most of my day actually working with Privy customers on Privy things, and then like nighttime was for M&A and due diligence, and leading that parallel life over a few months is not the most fun I've had working at Privy. But maybe to answer the other question, taking a step back. So I'm Henry. I'm one of the co-founders of Privy and its CEO. I spent the first part of my career, and this is how I got into crypto, as a sort of applied cryptography student, and then working at a company called Protocol Labs, where I was building an L1 called Filecoin. So I worked a lot on distributed consensus for Filecoin. And I came away from it at once, you know, really crypto pilled and thinking we have built an ownership layer for the web. But also this layer is completely unusable, and no one seems to care for products or users at the end of the day. We are so caught up in protocols and sort of tokenomics that we've lost track of what it actually takes to build compelling products on these rails. And so that is how Privy came to be, where the core point was, how do we enable developers to more easily build crypto into the fabric of their products so they can unlock better experiences on crypto rails. So what Privy does is we build basically a simple API so you can securely spin up embedded wallets. These are secure key management systems that sit within your app and allow users to hold and control digital assets as part of the app interaction, letting them plug into any on-chain system. So we work with the likes of Hyperliquid, Jupiter, a number of trading apps to enable smoother UX as part of trading experiences. We don't have to go out to a third-party app or a browser extension in order to trade. We work with consumer products like Zora, like Farcaster, in order to build basically wallets into the app itself. And we work with a number of payments and banking products that I can't name just quite yet, to basically help make digital assets a part of everyday traditional finance as a more efficient extra rail, to your point earlier about stable coins and generally tokenized assets writ large.
Fantastic. Well, Henry, I think the crypto natives are certainly familiar with your work on essentially, I want to say, most of the applications that have found product market fit or some significant user adoption. Privy's embedded. What's that?
You mean FriendTech?
Yeah, FriendTech. More so the Hyperliquids of the world. I think we've seen the Privy infrastructure, and now the next step is embedding this into the Stripe payment chain known as Tempo. And so maybe you could clue us into not just how this partnership came to be between you and Tempo, but a little bit of the lore, a little bit of the story. Did they approach you? Did you approach them? And but more generally, why is it such a good fit and a beneficial partnership for an embedded wallet to meet a stable coin chain like Tempo?
Yeah, so to be very clear, Stripe approached us, and the idea there, I think, was threefold. First, Privy is the most scaled embedded wallet provider around today. So we serve about 1,500 customers, through them about 100 million accounts, and we help secure and power billions of dollars of transactions every month for the consumers that our developers sort of host. And so as Stripe was digging into the space, they acquired Bridge some months prior. It seemed very clear to them that wallets are the core account layer for crypto, and you need this sort of global bank account that you can build into any product as part of building out a full crypto suite. So that was, I think Stripe's reason for coming to us. And generally, I think Stripe is trying to do two things, which is one, become, as the developer tooling company that it is, a purveyor of crypto infrastructure through Bridge, through Privy, as well as build these rails back into core Stripe products to offer every Stripe user just better access to these rails, all the advantages that digital assets can provide users in terms of like faster, cheaper, fully global rails that give anyone in the world access to stable currency and the ability to do more with that currency. So that's the Stripe angle, so to speak. Now, to actually address your question, Tempo is a project that's incubated by Stripe, but it's a completely independent blockchain. And I think when Stripe initially approached us, we weren't looking to sell the company. And the question was, what would it take for you guys to sell? And one of the conditions that we had is we are building for modularity. And that fact must remain. Like Privy works with every chain, Privy works with every infrastructure provider that includes Stripe and Bridge competitors. That should continue to be the case. And so too with Tempo. So why am I excited about Tempo? I think Tempo is addressing a very real pain point, which is that a lot of chains today haven't been built for large scale money movement on a global scale. Like today, if you look at the throughput of transactions that's being put through Stripe, and you assume we would try to move all of this on chain, every chain would fall over basically because of the amount of transactions. And then there's a number of ergonomic questions around like, can you pay for gas in any asset? Why do I need to hold, the native chain token aside from the stablecoin in order to do this? Are batch transactions built into the system? Are there priority lanes for payment, or will gas prices rise when there's a really cool NFT airdrop? In spite of the fact that it has nothing to do with me trying to buy a good. And so I think there needs to be a lot more payments focus at the sort of L1 layer, and that's what Tempo is built for. And I think for our part, we're really excited to partner with them and serve them. But by no means are we sort of exclusively serving them. We're working with every blockchain that our customers want access to, which has always kind of been our goal.
Yeah. Yeah. I mean, so one particular point here on the gas, or just gasless transactions as a whole, I think that that's something that a lot of people get stuck up on when they're, first interacting with blockchain rails. You guys seem to be really pioneering this and pushing this as the standard inside of Privy enabled apps. Do you see gas abstraction becoming a regulatory requirement for consumer scale wallets, or just a basic UX requirement to be competitive? What do you see as like the drivers of gas abstraction?
Yeah. I mean, I think, my mental model is asking users to pay for gas is akin to having to pay per megabyte when you're watching a Netflix movie. So imagine you're streaming and basically every 8
I'd be
seconds,
broke by now.
your buffer stops and asks you, hey, can you please re-enter your credit card information, or can you approve this extra payment? It would make no sense, and it completely breaks down how we do these things. And I think basically gas is both an extraordinarily important part of building public blockchains, like it's spam prevention mechanism that we need, but also I think it's incumbent upon products and apps using this to figure out business models whereby they can take these costs and potentially pass them down to users, but not on a metered basis. Like Netflix charges you $15 a month, and they pay for your buffering, and the same should be true here for gas. So yeah, I think it's going to become de facto UX standard that users are not paying for gas, that applications are covering that fee, and we're doing everything we can to make it that the developer doesn't have to think about how to do that. So Privy has this notion of a gas tank. You can come in, you can put in a credit card number as a developer, and you can basically prepay for gas that gets drawn as users do things. But yeah, I think we'll look back 2 years from now, and the vast majority of people who interact with blockchains will have no idea what gas is, and nor should they have to.
How have you been able to find this common ground and sort of rethink some of the more foundational principles in crypto, like the concept, not your keys, not your coins, and the concept of gas? You've sort of reimagined these concepts in a way that makes it much easier and more convenient for the end user to understand, especially coming from a Web 2 world where they're accustomed to some of these flows. Like you said, like it would be so annoying to pay per megabyte on a YouTube video, right? But in crypto, it's just something that we accept, similar to self-custody. Custodying coins is an annoyingly secure but inconvenient thing to do.
Yeah.
And you guys have made it really easy. How have you been able to reimagine some of these things? And, where have you been, how have you decided where to draw the line between these hard-nosed crypto concepts and building something that's easy and convenient for end users?
Yeah, it's a great question. I'm gonna go in and posit that there must be some qualitative difference with crypto founders who have quit crypto and kind of like rage quit and then come back. That is broadly how at least I got here, which is I went very deep. I got very frustrated. I was like, well, fuck this. Like I love this space, but it can't be my career. It's gonna have to be nights and weekends for me. And left the industry and then got drawn back. But I think that means that our team broadly is a really unique mix of very crypto native. Like we understand the culture, we understand the technicals, we are very deep in it. And at the same time, we are not religious. And I think we kind of reject a lot of the crypto tribalism that I see around. And so I think we have a lot of empathy for our customers, a lot of whom are not crypto native and shouldn't have to be. And so I think we found a way to really balance what are the things here that we shouldn't give up. For example, when we launched embedded wallets, it was essential that key export be a part of it. I'll give you another example. We launched our first embedded wallets on EVM, and we felt it was really important that these be EIP 1193 providers, that they offer all of these same RPC endpoints that any traditional wallet would have. And the point was, a crypto developer should not have to distinguish between calling a Privy embedded wallet and MetaMask in their code base. And so I think these are things that require a bit of understanding of crypto and how crypto works to value. But I think on the flip side, all of us were like, unless we grow this space, all of this is for nothing. And so we have to make it that developers who are not crypto build don't have to think about the Rails, because I've never, used the product because it's built on Mongo rather than Postgres or something like that. Nor I think will consumers of crypto use it because it's crypto. They'll use it because it's better. I think it's a really tricky balance, and it's a weird plug, but if you scroll to the bottom of our website in the footer, there's a link that says, I think, technical decisions or moral decisions. And I think our core assumption when we started is we're going to mess some of these up. There is no world in which we take these risks by trying to move forward UX, and we don't make mistakes. And so we just have to be very truth seeking, where when we make mistakes, we have to be here to correct them. But I think that's kind of how we've tried to find that balance.
Yeah.
Technical decisions or moral decisions, the Privy Manifesto.
I mean, yeah, it goes deep into like L2Beat and to all the philosophies that we carry on as the institutional adoption happens of our space. Without a doubt, it's not like that these players are purposely trying to corrupt the judgment or technology that you've built, but they're going to try to make it convenient, easy, and what their customer sets are used to. And so I think the philosophy here is about really just sticking true to what it's really just this kind of like line, right, Henry? Like, you're kind of walking this line between convenience and security every single day. It seems like you guys have it dialed with passkeys, for example, Face ID, and like, these key exports. So like there's kind of like these non-negotiables, but then there's also like this gray area where, different types of customers, different types of use cases, probably, you can make and accept certain trade-offs in certain scenarios, and others you try not to.
Yeah, and I think our secret has really been that we only build things for customers. I think one of the things that crypto companies sometimes do too much of is like kind of function by partnership. Let's build this thing together. We don't have a customer yet, but because we're doing it together, it'll work. And I think we've tried to say anything we build, there needs to be a customer whose pain point we understand, whose product we understand. And I think that's been incredibly valuable for us. But it comes with a risk, which is that we give up on some of the things that make the actual infrastructure special. Like, if you carry this to its end conclusion, then let's basically just build massive databases and lose a lot of the value of these open systems. And so that is, to your point, the line that we're trying to walk, which is making sure we keep questioning the assumptions we're making on the path to actually making these secure systems more accessible to people.
Yeah. I am not surprised after reading a little bit of this manifesto. I'm not surprised in the slightest that you guys were successful. Like from the very jump, you can tell that what you were building, you saw as impactful, and you were building it, and it was always going to make a difference. I think it's worthwhile just reading a few words from this. It's really short, but I'm just gonna quickly. All right, so behind every technical decision we make as engineers, we are working to shape the world, to make it more as we think it already is or ought to be. Obviously, dark patterns abound, but beyond so blatantly engineering behavior, we project a worldview into everything we build. By making a confirm button blue and a cancel button white, we push our users to confirm. By ordering recommended tips in descending order on POS terminals, with the largest tips on the left and the smallest on the right, we are pushing customers to tip more. And you go on to say that history is strewn with smart, well-meaning engineers unknowingly opening Pandoran boxes. Ethan Zuckerman, the creator of the pop-up ad, which no one likes pop-up ads, right? That's part of the point here is no one likes ads. No one likes pop-up ads. Acknowledges, I'm sorry, our intentions were good. So you guys have a morality baked into everything you're building, and you're using this constantly evolving philosophy and constantly open-mindedly questioning the things that you're doing and viewing them from multiple perspectives to just constantly challenge yourself. We're just real quick, real generally, like, where did this philosophy come from? How do you think it was still instilled in you, and why are you instilling it in the projects and Privy and the things that you're building?
Yeah, I mean, it's a great question. For what it's worth, the words that we wrote here, they're very like high-minded way of saying we are going to mess up. Assume we will mess this up, and please call us out on it so we can improve. That's the bottom line. And I think, like, by the way, like, we're Privy_IO on Twitter, like, just actually do hit us up on these channels so that we can improve the product, and that's how we do it. For me, at least, it was probably two things. One is like working basically on an L1 for a long time and seeing basically that we get so wrapped up, and understandably so, in deep fundamental technical decisions, but it comes at the cost of speed. And ultimately, unless we can iterate quickly, then the space will be at a standstill. So this was kind of my promise to self coming back into the space was, if I come back, it needs to be with kind of a draw to impact that we don't get unless we're willing to take risks, which means being willing to mess up. And then I think the converse, this is a strange story, but that I stuck with me. I interned at Palantir once upon a time, and I remember folks there asking, what if we don't agree with the work that's being done? This was back in 2016. And I think the line from the folks at Palantir at the time were, listen, you don't need to work on something you don't agree with, but we care to do work even when it's complex and morally valent, because if we're not doing it, who will be? And I think that was kind of a sense of if we want to have impact, and we need to be willing to try things. And I would rather we try them, be held to account. And, for what it's worth, Privy builds transparent systems. Like, we use secure enclaves and on-device reconstitution. You can check how the keys reconstituted. You can get attestations for the code that's running in the enclaves. But again, I think it was a culture of crypto needs more people trying things, even when sometimes they go against the orthodoxy.
Very cool. Generally, I think this is a philosophy that's been, it's going to continue to develop, and it's almost, it's very honest. Like, it's giving you guys a sense of who you are as humans. You're going to make mistakes, like you said. You're incorporating your own morality, which is, I think, part of having a point and an opinion and making that known, but then also constantly calling to question. I wanted to make sure that I asked you about AI too, because we actually had someone just on the show before you talking about them launching their product and having millions of DeFi agents that are popping up when they go mainnet, and increasingly there's going to be agentic users of crypto and blockchains and these applications. And so when you're building wallet infrastructure and key management, how are you starting to adapt for the agentic future? What does this mean? How are you incorporating it? What do you think this landscape ends up looking like?
It's a great question. I have 2 points. Before that, I'll just rewind a step back. I think a lot of the taking risk standpoint comes with regards to UX and the types of patterns that we build into UX. One place where that should not happen is on key management and cryptography. And so this has actually been the reverse of this philosophy of trying things. Is we will try things on the delivery mechanisms for these key management systems. Where we won't try things is in the underlying crypto system and the security systems that we've built, where we use tried and true primitives assembled in ways that are audited. And so I just wanted to make sure that was clear, which is it's a duality of how do we build basically and set a floor for security that is extraordinarily tight, and then enable developers to shape these systems in the ways that they need. To actually answer your question, I think there are 2 things that to me come by. First, we have a policy system in Privy. So when you're using embedded wallets, you can set policies on them. These policies can be like, for example, I want these wallets to only be able to interact with this allow list of basically allow listed recipients. I want them to only be able to call these contracts, and maybe I want to limit the total value that will be transacted by the wallet on a monthly basis in this way. These are a very powerful policy system. And today it's used pretty widely actually by our fintech customers, neobanks, that want to build in risk controls where it's like, the Rollup bank account should only be able to transact up to $100,000 a day. Robbie can individually transact $10,000 a day, but like Robbie and Andy need to align before they can get to 100,000, things like that. The way we actually build this feature in the first place was because of agentic trading. We had a given customer that was building an agentic trader on top of consumer wallets. And basically the user could delegate access to the wallet to an agent to trade on their behalf. And our customer was like, if this agent hallucinates, my user is going to get wrecked. And so how do we actually limit what the agent can do on the wallet so that we have some parameter and some bounds for the non-determinism that comes with LLMs? And so that's been something that we found really interesting, is actually we see agentic usage of blockchains kind of leading the way on a lot of the UX and sort of error considerations that people have. And that's then finding its way to something you wouldn't assume is related, which is to say banking infrastructure. So that's the first part, is that's really how we've done it. We've let customers lead us, but we've seen that basically agents really test the bounds of how you think about user error and things like that. The second piece is to the, where we started off the conversation and kind of coming full circle. Why tempo? Why does it make sense to have payments focused blockchains? Well, if you already look at the TPS required for global payments, now imagine a global payments landscape where agents are trading. It stands to reason that things that weren't possible until now, micropayments that have never been a good design pattern in traditional payments until now, become possible. And so the velocity of payments on the web is going to explode. And we actually need blockchains that can stand up to that volume. So those are the two things that come to mind.
Yeah.
It's funny to think that right now the TPS of a lot of these blockchains is so low that it can't handle a lot of the payment flows that you're describing. But unironically, we actually need the coordination mechanism of blockchain just scaled up in order to handle all of these flows.
Yep.
Yeah.
I had a quick question from Flo about privacy when it comes to using Privy. What is something about privacy that he's interested to understand how privacy is embedded to Privy. I think private payments are getting very popular now. He just wants to understand what the roadmap is, I think, or kind of what people are scared to admit about privacy in payments in wallet infrastructure.
Yes. We have one team member, actually, Kylie on our team, who you should follow, who is very deep in this space and doing a lot of work here on our side. The core point is this. So first, let's lay out like how privacy works with Privy today. So Privy wallets can be built to be fully self-custodial, meaning only the user can reconstitute keys and use keys to do any transactions. With that said, the linkages between users and wallets is known to us. It's not publicly known, but for example, if you sign up with a Google account and you generate X wallet, the link between the Google account and the wallet is something that we can see. And this is why we support external wallets as well. You can just always sign up with your MetaMask. You can have like pseudonymous emails, but like the point is that link is known, and we want to be very transparent about that on that front. What we're seeing is as traditional fintechs come in, especially marketplaces, Stripe and Coinbase, for example, work together to serve Shopify for merchant pay-ins using stablecoins. That's an area where we need private payments so that you are not showing people which merchants are making how much and creating like, physical world risks for everyone. And so that's an area, obviously, where new blockchains are working on this, like Tempo. And I think the reality is this is going to have to be a solution that occurs at a few different points in the stack. Blockchains will need private payments. I think there is room for asset issuers to build privacy into the stablecoins themselves. And then I think there are things that we can do as wallets to do that as well. So we've been exploring basically how to build native integrations into privacy preserving L2s, for example, as part of Privy. So there can be in the same way that we've successfully abstracted gas by saying, hey, just click this button and now gas is something your user doesn't have to think about. We want to build basically built-in privacy layer into Privy that allows you to do this. I think it's still very early, and the dirty truth is that crypto has not done half as much for privacy as we thought it would by now.
Yeah.
Awesome. Henry, thank you so much for coming on, man. It's been an absolute pleasure. I think we're out of time, but I'd love to continue the conversation. I think you have a very unique perspective coming from both the Web 2 world as well as the Web 3 world. You're really able to see the frontier of where these two areas are converging, and wallet infrastructure is such a crucial piece of this overall stack, to both the payment stack and the way that this is converging with crypto and blockchain stacks. That would love to have you on again sometime. This was a lot of fun.
Thank you. Thanks for having me on. Lots more to build.
Alrighty, Henry.
Congrats
Heads
on the
down.
acquisition. Talk to you
Thank
soon.
you.
Thanks, man.
See you guys.
See ya.
Alrighty, peace out. Boom. Boom, boom, boom. Yeah, I mean, Privy they got acquired for a lot. I mean, that is just, they hit it really. The people don't understand that Stripe got a steal on Privy. Like the Privy and Bridge acquisition for Stripe set them up to launch their own stablecoin, their own chain, to have users never use bank accounts anymore, and to be fully into the on-chain landscape with a familiar payments provider that processes payments for the entire world. So yeah, I mean, that is like, I think Stripe got a deal here on Bridge and Privy, and I see that is going to keep being. I think that's going to be the case for a long time. So it's great to have Henry on. I think up next we've got Thomas Cohen, the head of tokenization at Galaxy. Rob's going to take this one.
And you can't stick around for this one, man.
And we're going to talk.
It's a shame.
Stabled Up, episode number 4.
And so he's busy.
We'll be right back.
I'm looking forward to it. Man, I'm stoked. Stabled Up, episode 4. Thomas Cowen from Galaxy has a long and storied history in the area of stablecoins. Before he even got to Galaxy, he worked on one of the first research projects. And this was more than just a research project. Project Hamilton was a project from the Boston Fed. And it was really this endeavor into CBDCs. And so CBDCs obviously were sort of this idea before stablecoins even really got started. And Thomas Cowen was working on arguably one of the most influential and important research teams to look into CBDCs from a government and a nation state perspective. So I'm super stoked to have him on the show today to talk about what he learned while he was working on Project Hamilton at the Boston Fed, how he ultimately ended up working in stablecoins at Galaxy. He's now head of tokenization at Galaxy. And ultimately, there's so many learnings from being in this space for such a long time. Thomas Cowen, I'm sure, has plenty of really fun and interesting takes for you guys. So we're going to bring him up in just a moment, and we're going to have a good time. Thomas Cowen, welcome to the Rollup. I'm super excited to have this chat. I don't think we've ever had someone who has been at the Federal Reserve and also Ripple and is now the head of tokenization at Galaxy. That is a very unique position that you're holding in the industry. So it is a pleasure to have you here on the Rollup.
Of course, Robbie. Thanks for having me, and excited for the conversation.
Absolutely, man. I mean, we were just talking before this, bull market, it's good vibes. We're enjoying the times. I think we all grind through and survive in some of the tougher market conditions to make it out and enjoy some of the things that are happening today. Bitcoin is breaking new all-time highs. Things are generally trending up and to the right in a very positive direction. And it's not just market prices that are up and to the right. It's the actual use of this technology. Hester Pierce is talking about cryptography and privacy. I mean, I remember Gensler, and that was kind of all I knew as an SEC chair. And now, we are very much in a different set of circumstances. Before we get into kind of the current moment here today, it's your first time on the show. Maybe you could give us a little bit of a background and kind of a walk through your very storied history and experience leading up until this point. Thomas, how did you find yourself leading tokenization at Galaxy?
Yeah, absolutely. Happy to give a quick background. So, I mean, I love how most people in the space have a story of, they had their old career and then they kind of went deep down some rabbit hole and then, the rest is history in terms of going deep into crypto. And for me, it was when I worked at the Federal Reserve on their crypto team, and then I worked at Ripple, and then was at Paxos, helping build out their stablecoin strategy, and then finally ended up at Galaxy, helping build out the tokenization team here. And so, been in the space for about 5 or 6 years at this point. And to your point, this industry has its highs and lows. And so it's wonderful to be at a relative high at the moment. And one thing that's exciting is I do feel like this time, we have a lot of wind at our back and that we have increasing regulatory clarity. We have, the technology has really reached a level of maturity that has much stronger than previous cycles. And then we have institutional adoption and interest that we just haven't seen before. So you put those three things together and it really creates, an environment that allows us to really run with it and build out the technology and the adoption that we've all been looking for so long.
Yeah, there's been a flurry of news from the very core financial infrastructure that has underpinned our just not TradFi, not DeFi, just finance in general. The SEC is considering allowing stocks to trade on chain, incorporate some sort of stablecoin collateral potentially. I've heard things from the NASDAQ. We're also on the brink of 24/7 trading for a lot of these equities. So it just feels like we're starting to realize the effects of this technology. We've seen this being understanding of blockchain for a long time. We've seen where this is headed. It finally feels like the rest of the world is catching up. I want to get a sense of where you were when you were at the Fed and you were working on crypto. I take it was probably a rather small team and a pretty tight-knit community at the Fed that was working on the crypto initiatives at the time. When were you there? And generally, what was the vibe? Was it still trying to parse out stable coins versus CBDCs and central bank digital currencies? Maybe you could kind of untangle this web of how things were back then.
Yeah, so it was actually on the Project Hamilton team that looked at CBDCs specifically, and it wasn't pro CBDC or anti CBDC. It was more, hey, let's look at this technology, see where it applies, and see how it can impact the role of currency and the dollar more broadly, not only here in the U.S. but also on a broader scale across the world. And so the mindset really was, what is this technology and what could it unlock? And so that's kind of the mindset that we had there, and it gave me a lens through which to look at the existing financial system, how it has evolved over the decades, how technology has played that role, and then as importantly, look at crypto and say, okay, how can blockchain specifically help improve the system that we have today? And it's less of, hey, let's completely upend the system and more let's improve it and cut costs, boost revenues where we can, and increase availability to different investor classes and different people all over the world. And so that's kind of the mindset that we took. And now that initial kind of 2020, 2021 kind of mindset that we had, we're finally beginning to see that begin to bear fruit as we get regulatory clarity, as we get major financial institutions that have helped define the U.S. economy more broadly and finance more broadly, really begin to think about this and recognize, wow, this is no longer just a technology or science project on the side, but increasingly technology that we're going to adapt into vast parts of their business lines more broadly. And we're still super, super early, even though for those of us in the space, it feels like it's been a long road. I think it's just exciting, really what we're going to see be and how quickly it's going to happen once we really get people to buy in and see the potential this technology has.
Could you tell a bit more about the story of Project Hamilton? Where did the directive come from? Where did the order come from? You know, on the food chain at the Fed, did it come from the very top? And then maybe you could explain what the outcome of Project Hamilton was. What were some of the findings and the conclusions that you drew? And we'll maybe, you know, parse that into and catch up as to where stablecoins are today.
Yeah, totally. So it was very much looked at as a research project team within the Boston Fed in partnership with the MIT Digital Currency Initiative. And so the approach was from a tech perspective, what can this technology do to help move currency more efficiently across the world and domestically as well. And there were a few main takeaways that we had when we published the paper in February of 21 or 22 now. It's been a long time. But the couple of takeaways were, for starters, with a product or currency as liquid as the US dollar, it means that the kind of speed and the volume that you need, frankly, doesn't work well on a blockchain. For the TPS that you would need for CBDC, a retail CBDC specifically, you'd need at least north of multiple millions of transactions per second. For context, Visa, last time I checked, could handle up to 60,000, but they average closer to 6,000 to 10,000. So just it's a few orders of magnitude greater than what blockchains could handle. And so, one of the biggest conclusions was maybe blockchain actually isn't the best use case specifically for retail CBDC. Another big takeaway was, it's rare that we would see an institution like the Fed face retail directly. It never has and is unlikely to in the future. And so one of the other takeaways was, that those roles would likely stay the same. And so it would remain intermediated by the commercial banking system. And so the other thing too is the timeline as well, highlighting that if this were to take place, you would need buy-in from DC and buy-in from legislatures and the executive branch as well. And so the timeline is long enough that at least I came to the conclusion that, hey, I think that the U.S. private sector is likely going to solve a lot of these problems that a CBDC might, if it were moving a little bit faster. And so at least for me, that's when the light bulb went off of, I do see a dollar moving on chain. The question is how and in what use case. And that's really when I kind of went down the stablecoin rabbit hole, and I'm still very much involved in stablecoins and think that they are going to be one of the key ways we move and store value going forward. That being said, I think that we're going to continue to, move value on the old rails for a long time, similar to how, people still cash checks, people still use wires, when in reality, Venmo and other payment platforms do move faster. So I think it's another avenue through which to move value, but it won't be one that replaces all the others.
Got it. That makes a ton of sense. And now we also have people directly in Washington. We have Secretary of the Treasury Bessent speaking about the scale at which they're going to issue stablecoins to the tune of $3 trillion by 2028. There was recently a tweet by Naval that said stablecoins are just CBDCs with extra steps. As someone who worked at the Fed on Project Hamilton, did intense research into CBDCs, and then went on to work at Paxos, significant issuer of stablecoins, and now, again, head of tokenization at Galaxy. Is there truth to that? Getting back to the basics here, what separates a bad CBDC from a good stablecoin?
Well, there's a lot in that question and a lot to unpack. One thing I would focus on is at the end of the day, when you build a new technology, it can be used in a lot of beneficial ways, and there are also risks with any new technology. And the question is, as it evolves and as it is created, you need to make sure the industry uses it in ways in the most, in the best way possible, innovating and pushing the ball forward, while at the same time having regulators come in and create the rules and the regulations that put up walls to ensure that it's used in the best way to benefit, the consumer base as much as it can with limiting the drawbacks. And we've seen this over and over and over with new technologies, going back from, Visa starting in Fresno, California to the rise of the internet, to Uber. Over and over and over, we see that, technology racing ahead of regulation, and then regulation catching up, And it's just kind of a constant, give and take. And this is no different, where people are recognizing, especially those of us who've been in the industry for a long time, recognize the benefits of this technology. And the question is how we make sure that we create a regulatory environment to maximize the best part and minimize the risks. And I think increasingly in the past couple of years, and this year specifically, we're beginning to see that really bear out, whether that be in the US or Europe or Asia more broadly, where people are beginning to recognize the technology and help put in rules to embrace it and incentivize innovation as much as possible.
Yeah, absolutely. I think the regulatory environment is something that there's no doubt, there's no objections. It is certainly fostering innovation. And one of the things that I think was extremely positive that, frankly, the market reacted negatively to, which makes a ton of sense. But I think just on a pure first principles basis, the SEC saying that they're going to start to investigate 200 plus digital asset treasury companies for insider trading because of some of the movements that took place ahead of them announcing their crypto strategies. It's like, yeah, that is common sense regulation. That's not regulation by enforcement. They're not saying just, letters out the wazoo to these companies. They're saying, we're going to go investigate it. We're going to find out what's going on here. And that's not going to slow down the rest of the positive innovation that's happening on the rest of the industry. I do want to just double click on this question though. Like, what's just kind of catching up the last couple of years, what separates and fostering innovation, certainly, as people in this industry, is super helpful and super healthy for this industry to kind of foster, sustain, and grow. But from all of your experience, what separates the current era of stable coins and why they're such a positive impact versus the potentially treacherous CBDCs that we had seen in the era of 2019 to 2022?
Yeah, I mean, I think zooming out, thinking about what currency is and what a dollar really is, when most people think of a dollar, they think that all dollars are the same. In reality, $1 in your PayPal account, $1 at JP Morgan, $1 in your wallet, and a money market fund all are equal to $1. But in reality, the risk profile is very different. They're intermediated by a different system, and so it means that while from an accounting perspective, that's all $1. From a risk perspective, it's very different. And so when you think of a CBDC versus a stablecoin, the risk perspective is also different, right? By definition, a CBDC is a direct liability of a central bank, whereas a stablecoin is a liability of a private issuer, a Circle or a Tether, that's backed by cash, repo, and treasuries, right? So it really just depends on how you define what a dollar is and how it's treated. And then, of course, the question is, given that, how do you regulate it to be able to ensure that the capital can move in a very efficient manner, but also is used in an inherent and safe and contained way? And so that balance, I think, is one of the biggest challenges that we're going to have as we see the movement of currency, moved on chain. I think the extremes usually people agree with, that there should be some way, like cash is completely anonymous. I would love for that to remain the case. But at the same time, when you move vast amounts of money, most people would say, yeah, if you're moving a ton of money, it would make sense to make sure that there are KYC and AML checks for that, right? So like those extremes, usually most people can get on board with. It's the middle that really things get interested in what those use cases are. So just like any other technology, we've shown what the benefits are and what the possibilities are, and now the question is how we come together to leverage it to upgrade the system while minimizing the risks. Right.
Yeah, I can see the current dynamic of private issuers of stable coins creating somewhat of a fragmented system. That we've had this conversation about private issuers going all the way down, Walmart stablecoin, Amazon stablecoin, the Meta Libra project being revitalized, and seeing all of these things. How do we maintain fungibility across them? Could lead to some issues. But then again, the CBDC certainly has its issues with surveillance, state potential outcomes. So there's certainly a lot of nuance here. But just to be reductive for a moment, Naval's tweet, fact or fiction?
I mean, honestly, I have to dig in more. I think At a high level, I look at it very much as a tech perspective of, okay, how can we leverage this tech to be as beneficial as possible, and really think through what it can be. And one thing that's exciting here at Galaxy is, well, the industry's really found product market fit with stablecoins, as a more efficient way to move money as overseas dollar access in emerging economies, and as a trading pair for Bitcoin, Ethereum, and other digital assets. We're really beginning to unleash what this technology can do beyond stablecoins, money market funds, debt, tokenized equity, and beyond. And so we're really excited to see what, given the past of showing that stablecoins have that future going forward and that growth, now really what we can do more broadly across different financial assets.
Very, very diplomatic answer. Really, really appreciate that. And I'm curious, when you're looking at the U.S. market, this is certainly a result of the regulation and the developing landscape that we're having here, and really fostering innovation. We're seeing private issuers coming out all over the place. And it is really, really cool from my perspective to see the private and public markets go head to head in stablecoins. We're seeing Wyoming, the state of Wyoming, issue there's a publicly issued by a state government stablecoin. At the same time, we have Circle, one of the largest IPOs this year, private company launching stablecoins. So the Wyoming currency and effectively still the US dollar, but the Wyoming stablecoin, the USDC, these are going to go head to head. And this is how things are playing out in the US. We have a very capitalistic attitude. It's really cool to see. Other places, for instance, Europe, there's kind of speculation. They're kind of toying with this idea of a CBDC. They haven't fully embraced a full privatized stablecoin market as of yet. How do you think the non-US dollar denominated stablecoins, how do you think that landscape might play out? And then I'd love to go on to some more broader strokes tokenization combo.
Of course. So I think one thing to think through is, in many ways, we're kind of in the wildcat era of banking, where we're having a privatized version of the dollar to an extent. And I think what will end up happening, in the beauty of the Genius Act, is the goal is to standardize all of that. So we can go back to thinking of a dollar as a dollar, just like a dollar at JP Morgan and a dollar at Bank of America trade equally, even though they're liabilities of different institutions, right? So from that perspective, you and I, when we think of money in a bank account, we think of it as standard, when in reality, it is at different institutions, right? So that I think is where we'll end up. And in terms of on the Europe side, actually, one of the big initiatives that I've led here at Galaxy is helped form a joint venture with DWS, which is the asset management arm of Deutsche Bank, Flow Traders, and Galaxy, to form a joint venture and launch a euro-denominated stablecoin called AllUnity. And we chose to launch it in Germany with a BaFin license in the MiCA regulation. And it's euro-denominated, and really we saw that, if you look at Europe today, it's still frankly dominated on chain by the Tethers and by the USDCs of the world. The euro-specific stablecoins are still pretty limited. And so we saw a big market opportunity, knowing that, hey, as the market matures, there's likely going to be demand for euro denominations on chain. And so that's one thing that we really are excited by and continue to see grow after our launch this past July. And I think the fun part is, long term, we're likely going to see the amount of on-chain currency match off-chain currency. So we will see more and more currencies come on-chain, and then FX markets will emerge and the like. But again, we're still so early. It's funny how, to us, 290 billion in stablecoins is so big, but in the trillions that currencies live on, it's tiny. So we have a long way to go.
Wow. So the amount of on-chain currency flipping the amount of, or coming to par with the amount of off-chain currency. Where's it right now? Is it 80-20? Is it 95-5? Is there any?
It's fractions of a percent.
Yeah.
It's not even close. And we have a long way to go, and we're excited by that, right? Because it just means there's a lot of opportunity there. And as we know, stablecoins are the part of the industry that has the most product market fit, where people very clearly do see it as a more efficient way to move value across borders. They do see it as a more efficient way to get overseas dollar access in emerging economies with weaker currencies, and they do see it as a more efficient way to buy Bitcoin, Ethereum, and other digital assets. So it's found product market fit, and that's just the beginning. And we're really going to see it grow substantially as stablecoins become a means of payment and a store of value across different parts of the financial ecosystem more broadly.
Absolutely. And this is a very similar premise that Secretary Bessent has talked about it. You're now talking about it now, scaling to 3 trillion, scaling it so that we're on par with the amount of off-chain currency. We'll bring it, I'd imagine, exceeding 3 trillion in quite some excess. And so starting from this premise, what are some of the knock-on effects of this? And I can just sound off just for a moment, and I'd love to get your take, because there's also, and I was in Asia. I was going to these conferences. I didn't get to go to the Network State conference, which I'm sure was really, really interesting, because this is essentially an economy and a network state that's already built on stablecoins. That is the lifeblood of the economy. It is kind of the national currency of each network state. Mm-hmm. And so I'm curious, as greater amounts of stablecoins are put into circulation on chain, this will inherently flow into the economies of network states, and not necessarily the economies of nation states, unless those nation states are on chain. And so to me, it's a slipperier slope for stablecoins to go into something like a Hyperliquid or an Ethereum rollup or an Ethereum ecosystem, rather than starting from first principles. We create these stablecoins, we put them into circulation, and then they make their way into a money market fund or a stock indice, unless that thing is tokenized. And it's almost like this on-chain liquidity begets more on-chain liquidity. Are you thinking about the same way? What do you think are some of the knock-on effects of generating and circulating so much stablecoin supply, so that we reach this inflection point going from off-chain to on-chain?
Yeah, so I think when we think through any kind of technological adoption, that whether that be financial related or not, kind of the first wave is you look at what the technology's potential is and how exciting it is. When the first iPhone came out, everyone said, wow, we don't know what all the uses will be of it, but we know it's fascinating. And then, then the App Store comes out, and then all the uses of the technology really unlocks. And we're in the same thing here, where people have shown that using a stablecoin to move money cross borders is just faster, better, cheaper than the correspondent banking system. So we know that that's better, but then what are the actual uses and the implications of that? That is the part that we're going to get into over the next, 18 months to a couple of years, where people will say, wow, now I can just move money in a faster, better, cheaper manner. What does that mean from an economic point of view? And that part is when the technology begins to fall away, and people won't know they're using stablecoins. People won't know that the back end of their financial life is on chain. They'll just know that they're able to pay their relatives more efficiently, that they're able to send money home, that they're able to pay for goods more efficiently. And it just means that the global economy can be even more integrated and have even less friction when you're moving value across borders. And so we're going to get to that inflection point. I think with stables, we're getting there in terms of seeing the use from just the technology. But I think in terms of other financial products, we still have a long road ahead. But we're beginning to see kind of the benefits of them come to life.
Yeah. There's been a lot of speculation that AI is going to lead to this, GDP increase and productivity boom as a result of the efficiency of the labor market, and basically, a lot of automation. But when we're thinking about capital efficiency, it feels like stablecoins are right there. Like they're a very clear use case for how we can make all of this capital flows more efficient. Maybe you could just close us out here. What are some closing thoughts? Do you think there's going to be categorical changes here? GDP increase, banking sector decrease as they get innovated? Generally, what are some conclusions that you draw? How do you put these things together?
Yeah, I think one parallel that I like to make, and I can steal from 𝘗𝘳𝘕𝗟, he always talks about how before the internet and after the internet, what it really did was the amount, once you could move information much faster, it meant the amount of information, increased by a large number, right? By like exponentially. And I think we'll see the same thing here, where because the cost to move money and the cost of payments will decrease so much, it means that people are going to be much more likely to pay fractions of a cent to access content, for example. And so that's for people. When you get to the AI end of things, there's no reason why you can't have AI agents paying fractions of a cent for access to certain information, or to get through a paywall, or to make sure you're not a bot, or whatever it is. And so I think we're going to see a merge of these two technologies that will be quite beneficial and create a lot of efficiencies. And at the same time, I think over and over and over, with every new technology, a lot of the time people think, oh, this is going to wipe out so many jobs and impact our GDP in X, Y, Z ways. And at least up until now, we've seen a lot of people been able to create new jobs, create new industries, and generally improve the livelihoods based on this new technology that we've seen. And I think this is no different. And at Galaxy, while I started focusing on stablecoins, we're now much more much broader, looking at money market funds and on-chain debt and tokenizing our own stock and all of that. And so while stablecoins is the first chapter, we still have a long road ahead, and we're excited to continue to lead the industry in that way.
Awesome. Thomas Cowan, thank you so much for coming on. Absolute pleasure talking about this induced demand as a result of making capital more efficient. Love to have you on again sometime soon. And just generally, as we're pushing beyond stablecoins and into money market funds and indices and bringing things on chain, we're moving at light speed, and there's lots to talk about. So thanks again for coming on.
Of course. Thanks for the time.
Alrighty.
Andy, you're back.
That was Thomas. I'm back.
How you been?
Pretty good, man. I mean, those guys are, with the Galaxy One app that they just announced, the neobank wars are absolutely on. I mean, absolutely on.
Yep. Obviously, Plasma, which we covered, Tempo,
EtherFi.
Quite the neobank vibe, but EtherFi.
Yep. It's on. I mean, it's on. They're not only going after Revolut and Venmo and all of those, but they're going directly at banks too. So it's on. It's on. Rob, I wanted to run through some Kalshi picks over the weekend from last week. I think my portfolio is looking up.
Yeah. That Bitcoin 125 probably hit, but has came back.
Bitcoin definitely hit. Yeah, I got a couple that I need to hit on. So all right, so let's pull Kalshi up on the screen, and yeah, we'll go through some of these.
I like the crypto markets here, where it's like, will it hit this number? Because you don't have to sell. The market will now become determined as a yes.
It's just like an option. So I hit on Toronto. I lost on Philadelphia, Denver versus Philly. I had Philly. I took an L there. But let's go back up to the trending markets. I guess there is Trump's doing a cabinet meeting right now. So
yeah, these mentioned markets are pretty interesting.
Sorry about that. One sec. Flip that back. Wow, this is trippy. Mr. President.
Mr. President. All right, so we don't see what you see.
It's coming up. It's coming up.
Okay.
Trump's going to speak right now.
So we want to live trade some of these mentioned markets?
Yeah, Leo will pull it up. Starting now. So okay. We'll pull it up. Basically, it's on Kalshi. You can see the actual screen. You can see the audio. You can hear it. Just give me a sec.
Muslim majority countries from around the world, including Indonesia was there,
so these are
Pakistan was there,
99%.
and created this coalition behind this plan. then on that
Water,
following Monday, you met
Hamas.
with the Prime Minister of
Should we
Israel
take
here,
hottest?
and that plan was presented.
That's
And
a
then,
that's a
of course,
staple. That's a good
our
one.
great
I've actually
political
taken
violence?
no
followed
some
up
of
on it.
these.
In the interim,
Why is he going to say? Why is there 99%
again,
chance
perhaps the
he's gonna
stories
say
will be
water?
told, perhaps it will never be
Yeah,
told.
well,
the president
yeah.
had some extraordinary
But if you hit,
phone calls,
if you buy
meetings
no for that, it's like 10 to win.
that required
I'm gonna take
a high degree of
hottest.
intensity and commitment,
Okay.
and made this happen.
like
And I think what's
AOC
important to
has he
understand
already-
is
has he
that
already started?
yesterday what happened was really a human story. There's a
think he has,
geopolitical
yeah.
aspect to it, there's
Maybe
no
he's
doubt
already
about
said
it. It
some of
creates the conditions for Gaza to one day be a normal place again and people to have a
Okay,
better
let's
life and Israelis
let's
to be
get.
safe.
Do we have sound on?
But yesterday
Oh,
was
yeah,
a
it's
human
on.
story. And because of the work you put in, and honestly, there is not only is there no other leader in the world that could have put this together, Mr. President, but frankly, I don't know of any American president in the modern era that could have made this possible. Because of the actions you have taken unrelated to this, and because of who you are and what you've done and how you're viewed. And this weekend, because of that, at some point very soon, we are going to see 20 living human beings emerge from the darkness into the light for the first time in 2 years. And that is because not only were you used the credibility and the power and the prestige of this office and the relationships you created, and you committed yourself to making it happen. And I think it will go down as a historic moment in the history of our country, and something our country should be very proud of, that we have a president that's committed to the not just peace, but to the human aspect of reuniting these families. My last point on this is just a couple of days ago, Secretary Lutnick hosted us all, many of us, at the Kennedy Center. And we have these families, we've interacted with them for so many years, for 2 years now. And the stories are heartbreaking, both whose families are alive and those who are deceased as well, who want their relatives back so that they can complete the process of grieving. And it was, we had all hoped that perhaps that was the day that we would have an announcement for them on the anniversary of the 7th. But I know you were able to speak to some of those families last night. And I just hope the whole nation understands how incredibly proud they should be of their president and of their country for the role that they've played. And I don't want to let this moment pass, Mr. President, without also noting the incredible work of Steve Witkoff and 𝘮𝘮𝘮𝘮.
Yeah.
They're an incredible team working together, facing some substantial impediments to even
Not hottest
being there
here, so
this
we'll see
weekend
what
and doing
happens.
it. Let me just leave it at that. And they've done a great job on your behalf, Mr. President. They deserve a tremendous amount of credit. But thank you for what you've done for the world.
Thank you very much.
Here we go.
Appreciate it. I think because we have a very busy day with all that's going on, what we'll do is maybe just a few of you raise your hand if you'd like to say something don't talk too long, Doug. He's doing such a great job. So good that he could talk all day. That's the problem, right? But, and what we'll do is just take a few hands and then we'll go back to getting peace done, okay? We'll go a little bit quicker. We'll take a few questions from the press. Go ahead, please.
President Trump, I just want to double down on what Marco was sharing. It's such a remarkable accomplishment. Agree that no other president could have done this, but what set the groundwork for you able to do that? When you took office on January 20th, you made a 180-degree turn in our military strength with Pete's leadership. You were the master class in peace through strength. So militarily, we've completely turned around. We've demonstrated that through execution against
What is
Iran
windmill?
and others.
Why is windmill
we
so
have
high?
force. We want to end wars, but we'll use power if we have to. And then secondarily, peace through strength is also the prosperity, having the strongest economy and being willing to wield the power of a tariff in addition to the military power to reorder the globe. Those two things that you're standing on, both economic power and military power, allowed these negotiations to go forward. And I think as you've described the importance of these economic negotiations and all the trade deals, but that also begins with another
Come on, say hottest, Trump. This guy, this fucking guy. Come on, Trump. Come on. Say hottest. All right, we'll just pull this back out for a sec. Pull it back to Rob and I. And basically what this guy's saying is that, I mean, they're just talking about the military. And we're going to get the screen audio up here in just a sec. Leo, let's just flip back to Rob and I. Record numbers of recruitment. Come on. Wow. All right, we'll give guys, just give it 1 sec. We're gonna get this fired up for you guys. Just gotta fix the quick audio setup here. 1 sec. Man, so we need Trump to say hottest is basically what we need. Yeah, Rob, I mean, I don't know if this is really that great of a bet, if I'm being honest. We'll see. You're on mute, I think, but
Yeah. We only went with hottest.
yeah. All right, let's go back. Should be good to go.
This is the mention markets are definitely the most fun. Live, playing out in real time.
Yeah, the loopback setting was auto on mute when capturing. Is really silly.
Okay, so if we pull it back up, it should work.
Yeah, and we can keep playing it. Hopefully, he says hottest. Here we go. We're up on hottest now.
Jay just called Chuck Schumer a Palestinian. People are cracking up. Mm. Government shutdown, hot topic. Maybe the hottest topic. Dude, Rand Paul is such an interesting
Well,
character.
they're just talking about what's that? I don't think this is gonna hit, man. Honestly,
No, they're on press questions now. Could work. Now there's a little more volatility here in his responses.
Yeah, it could be. Could be. Well, that was that. So we'll kind of see what happens, and what kind of comes of this. But as of right now, I think it's pretty clear that the government shutdown is the key main topic here.
Interesting. This guy just said 6'7".
All right, guys. Let's go ahead and just roll off here and close out. And yeah, guys, we'll have to figure out. We'll figure this out. Yeah, I don't think that this is gonna hit, but yeah, let's. Yeah, a lot of things happening. Bobby, do you want to say something?
I, for one, think this is a new paradigm in live entertainment. I think mention markets. I think, there was also a sports betting platform called Better that let you bet on like live, like play by play. Obviously, the issue here is liquidity and fragmentation across different markets.
Yeah.
Like you need market makers to take directional risk on what is going to happen on a particular play in order for them to make that market. It could be, is this putt going to drop? Is this play going to be a run or a pass? Is this free throw going to go in? Is Trump going to say yes or no? Like each of this is going to, and this is a general trend, like financialization is accelerating. So we're going to have a proliferation of markets, a Cambrian explosion of markets. I think that term is now applicable again. Cambrian explosion of markets. It's going to lead to greater price discovery on assets and outcomes that we previously did not think was possible and we previously did not see. And that's going to give us a lot of information about the world. And multiple people, I think 𝘮𝘮𝘮, Nick from 𝘮𝘪𝘮, like people have said time and time again in this industry that markets are the greatest insight to our reality. They are the truest form of information. I think Shane from Polymarket, I'm sure 𝘮𝑪𝑒𝑘, this is something that prediction markets are very, very, it's a very core belief of prediction markets. So we'll continue to draw information out of these markets. And as there's more markets, it'll give us more information, but there needs to be people to make these markets, because if there isn't, and these markets are liquid, they're going to be conveying inaccurate and like incorrect information about the world.
Yep.
And so this is going to provide an opportunity for market makers to diversify their business into new sectors. But there's going to be new market making firms that come out as a result of this. firms that are specialized in the weather, specialized in politics, specialized in sports, market making firms in these burgeoning non-traditional financial industries.
Yep.
Is probably one of the most nascent markets and industries that are out there right now. I expect it to boom right alongside the Cambrian explosion of markets that are out there. And it's gonna ultimately, I think the prediction market platform and the exchanges that win are gonna be the ones that are able to consolidate liquidity and foster relationships with these market makers in these emerging markets, in these emerging sectors. Because I mean, just to think how, like, on a any given Sunday or Saturday, whether it's college football, pro football, you have 100 plays going on in each game, and you have a dozen games. So you're talking thousands and thousands of markets that originate and expire in the same day, and that is just that is a rapid explosion and acceleration in the velocity of capital that is flowing through these markets.
100%.
We need high TPS chains. We need highly performant market making systems in order to keep up with the type of information flowing through these systems.
Yep. I agree. Rob, it's been a great stream. Fun segments, good rumor mill, fun little betting market at the end. We'll see if we end up hitting on that. I doubt it. But guys, we'll see you guys tomorrow. Signing off.
And Grant.